Today we're talking about assumable loans and interest rates. Do you want to be able to buy 2 houses instead of 1, or maybe $1 million house instead of a $500,000 house? And right now the interest rates aren't cutting it. Well, maybe you don't have to wait for the Fed to drop interest rates.
How do we do that? How do we take advantage of so many people with a 4% interest rate or less by loan assumption? And there are 2 types of loans we can assume: an FHA loan and a VA loan.
So I don't know exactly how loan assumptions work. When you assume somebody's loan, you have to also assume the standing debt that they have on their mortgage, right?
Correct. So you're taking over their payment and as well as their current balance. So it's just like getting a mortgage from any loan officer, except you just have to qualify through the investor, through the mortgage company who the seller got their mortgage company from. And then also you take responsibility for the payments. VA works a little different. If I were you and you're thinking about assuming a VA loan, talk to your realtor to get advice from them. The current veteran has to agree to some things. You have to agree to some things. So there is a difference between FHA and VA. However, both are primary residence. You can't purchase an assumable loan as an investor. Only primary. Of course, there's all kinds of ways to have a home that you currently have, rent it out, and then purchase the next house as an the next house as your primary. Keep it for a couple years, and then you can flip-flop back and forth every 2 years from primary to investment. But it's a great way to get into a home with a lower payment. We just closed on a 4-level townhome in Reston, Virginia. The sales price was actually $989, I believe. And we were in competition. We submitted an offer. We also included what we call an escalation clause, and we ended up winning the bid. We got it for $1,010,000. The great thing is that the seller were 2 sisters, and they were only in it for a couple years, brand new property, and they wanted to move back to South Carolina where they came from. So the delta between what the price that they purchased the house for and what my clients purchased the house for was only $250,000. So we were able to go ahead and buy that property, assume the loan, and we didn't have to do any kind of secondary financing. My clients had enough money to put down. So how much money did they save? About
$2,500 a month.
$2,500 a month, 2.25% interest rate. They're thrilled. But it's very common. And in Northern Virginia, there's not a whole lot of FHA loans unless you kind of target newer subdivisions. Lots of VA, though. A lot of veterans here in Northern Virginia, especially if you're a veteran and you could find another veteran who has to move, because typically they're moving every 3 years. Great opportunity to pick up a house at a lower interest rate. Any other questions you have about VA finance?
Yeah.
I'm sorry, assumables?
Yeah, I was going to ask about, so we clarified earlier that when somebody assumes a loan, you also assume whatever debt they have in the house, and you have to pay that off. So say our clients didn't have a bunch of cash in the bank, and you're tight on cash. You could get it financed, so you could finance the principal and pay that off.
Good question. Excellent question. So if you don't have enough cash to cover the difference of the outstanding balance with that low interest rate, you can get what we call secondary financing, second loan, second mortgage, in order to cover that difference compared to how much cash you have. However, you do have to qualify for that payment as well. But hey, we do it every day. So that makes sense, right?
Yeah, for sure. Yeah, that makes sense to me. And I was gonna say it's something you can't do quickly, right? It's when you assume a loan, it's a process that takes a month or a couple months or what?
The last one we did took 60 days for approval. Our clients were a little bit more complicated. Their documentation, their credit documentation was definitely a little bit more complicated than most. They own several properties, and we had to document that they weren't renting them, that this was in fact going to be their primary residence. So it took a lot of back and forth with the lender, but we did it. We got it done, and they also had selling stocks, doing this, doing that, with large deposits in their accounts. So then every time you submit a bank statement and there's a large deposit there, we had to go back and document where that deposit came from. So it was a little bit longer probably than most people who just have the cash they need sitting in an account that's been in an account for 3 months, W-2 employees, and same jobs. I can't imagine it would take 60 days. But the investor said it would be about a 45-day process. So it was only 60 days to get approval. So that wasn't too bad. I've heard nightmare stories that it takes 6 months, but that wasn't our experience. But I think it's a great way to get in and buy a house.
Yeah, for sure. And it can make a huge difference. I was looking up numbers just to have an average of like $4,000 a month. If you can only afford $4,000 a month, the difference between a 7% interest rate and a 2% interest rate could be the difference between you being able to buy a $1.1 million house for $4,000 a month with a 2% interest rate, or if you have a 7% interest rate, it is still $4,000 a month, but you're only going to be able to buy a $600,000 house. So if you can assume a loan with a good mortgage, that could mean you're getting double the house for the same amount of money each month.
And actually getting into your dream home.
Yeah.
I mean, really, that's what it's all about, right? So, we may not have to wait for the Fed to drop interest rates. It's definitely a viable option. They're not easy to find, but we can help you find them, right?
Yes, ma'am. Redstone
All right.
Realty out.